Perhaps you'll give us a little bit of what's happening in Wall Street and let us know what's moving the markets this afternoon.
Yeah, good afternoon, Zinga. Well, of course, Monday was Martin Luther King Jr. holiday out in the United States, so we don't get sort of an update on how things are faring on that board. We did get volumes as well declining somewhat because of that holiday across the board, so not too many market participants as well, while the futures market and the bonds were certainly as well the ones that sort of looked to get the least a bit of volume because of that holiday, which certainly was in place. Unfortunately, though, it does mean we're seeing a whole host of red. It does seem that perhaps things out in China with that virus have certainly spread in terms of just sentiment really across the globe and how negative things are faring. On the local front, we're down nearly 2% as well. So massive declines there, as you noted. Asia going down quite substantially. Let's check in very quickly on how things are faring in Europe and see the exact numbers here locally. And we'll get to unpack the detail right after this. Pretty stable currency picture there, as you can tell, against the US dollar in particular, at around 14.50 odd against the US dollar. Let's unpack all the details, unpack all the data, exactly what is going on with the global market picture. Sean Morrison joins us now, and he's from IG South Africa, of course, live here at the Johannesburg Stock Exchange. Sean, thank you so much for the time, appreciate it. A bit of a negative picture across the board. Asia falling down quite massively earlier today. The All-Share Index down nearly 2% as well. The biggest losers seemingly being the platinum miners and the resource space there falling as well. 2.3% down for the gold miners. That's a torrid day.
Yeah, not a good day at all. I think, like you correctly said earlier on, negative sentiment stemming from Asia. We had Moody's downgrading the city of Hong Kong as well. And then you had obviously the outbreak of the corona, the pneumonia, the new form of pneumonia. Although I would say that there's only 4 people dead, and it's not to belittle that. That's obviously very, very serious. But an outbreak hasn't really occurred as of yet. But obviously the fear there is now going into the Chinese New Year. You have, if it has been, lying dormant, it starts to spread across, the cities as everyone returns home. Negative sentiment. I think there's broad-based weakness here. Resources, obviously, with the link to China, coming under the most pressure. What does surprise me a little bit is that we see gold is actually slightly lower on the day, and usually we see some type of safe haven appeal within the commodity space there. But the dollar is a little bit stronger as well on the day.
So where exactly are investors today, if you want to take a look at that? I mean, yes, the US was obviously clearly closed, so perhaps they're all eagerly anticipating the opening of that. But right now, it seems like they aren't headed into anything.
Look, I think we are finding a bit of excuse for profit taking in the market, although 2% would suggest maybe it's a little bit more than that. But we've had quite significant gains over the last couple of weeks. We've had major US indices after more than 20% gains last year, extending those gains, pushing to new highs in the first part of this year. So I think there's probably a little bit of profit taking, and that's been exaggerated by a bit of fear in the marketplace.
On the equity front, then we do have a little bit of news. Serious sort of money being put into a serious mine out in the UK, that is, by Anglo American. 7.6 billion rand is what they're looking to put into that. How big a deal is that, and how significant a move is that for Anglo as it tries to perhaps diversify as much as possible?
Look, I think the diversifying into fertilizers, the organic fertilizer space is quite an interesting move.
That's the going green there. Right?
I think it becomes more attractive as people start to change their diets and look for changing in farming methods. Farming becomes more and more important. In terms of moving the needle in the short term, I don't think so. I think that acquisition, very necessary acquisition if it gets approved by shareholders for Sirius, amounts to about 1.5% of the market cap of Anglo American. But there's a future investment spend that goes along with that. I think it's developing those fertilizer mines.
Yeah, at around $300 million a year, if I'm not
Yeah, I think that $1 billion has already been spent by Sirius, and I think Anglo American is looking at spending a further $3 billion on that. So that becomes a lot more material. So could affect sort of the cash flow in the near term.
Sure.
Although their balance sheet is looking much better than it was a little while ago. They've contained that debt. And I think they're expecting about 2.2 billion of free cash flow in 2020. So acquisition of 500 million, if you include the debt in that, they can absorb it, but I don't think it's going to yield results in the very, very short term in terms of moving the earnings needle.
Yeah, a lot of changes have happened though in the mining industry, particularly in platinum, yes, but on the whole, very local front, quite a bit has happened. Do you think that they're now primed for sufficient growth, particularly resources locally?
Look, I think there's been a lot of consolidation within the industry. We've seen acquisitions, we've seen smaller players getting taken out, we've seen guys reducing the debt on their balance sheets, readying themselves. The unfortunate part is it's always relative to the commodity cycle. So where do we think we are in the current commodity cycle? And that's obviously linked to economic growth. And we saw today that the IMF has downgraded its outlook for global growth in that. So, and then furthermore, we still have that the ongoing trade tensions between. We have some resolve, I suppose. We had a phase one deal, but it's not over yet.
Yeah, no, not by a long shot. That's for sure. Perhaps the rest of it can only be done after the November 2020 elections, then, which are indeed later this year. Still, perhaps then, if we move a little bit just on the global perspective, then you have that oil price going down as well, massively so, 1.6%. The fighting out in Libya is perhaps something of question, but there's also then questions around some issues out in Iraq as well. Is that sort of enough to push that price as far down as $60 a barrel even?
Look, it's a tricky one. Oil market is always trying to balance the supply, which OPEC is always trying to control. Obviously we have the disruptions in supply, and then the outlook for demand in the market. And the lingering trade war has reduced that assumption of demand, and we're seeing, like the IMF, downgrading the outlook for global growth, which are negative catalysts for the price of for Brent. I think for our own pockets, I think we're quite happy to see it starting to tick back after that, that the tensions in the Middle East saw that, skyrocketing of Brent. For now, I think, I think we've actually erased most of the gains that came from that, the first bit of tension between the US and Iran. So take it as it comes. I think the $60 to $70 per barrel seems to be a sort of the broad range that price of crude is trading in at the moment. And I'd assume that it would carry on doing so for.
Is the rand at sustainable levels, 14.47? Is it perhaps just a little undervalued at that range?
Right. Look, I think it's had a lot of risk priced into it. I think the markets are starting to
Is that because of the chances of a downgrade, or do you think that's already in there?
I think the base case has fast become that we are going to get a ratings downgrade post, and I think it's in March 27th is the Moody's ratings review, and that's obviously after the next budget speech. When you see factors like the SAA debacle, and we know that the renewal of load shedding and problems that exist in the marketplace having little to no effect, I think that maybe that is a fairly optimistic for the rand, that it's not it's not depreciating at a rapid rate in the past. So maybe we are getting closer towards a fair value.
All right. Sean, thank you so much for the time. Really appreciate it. Sean Morrison there joining us indeed from IGSA, getting us to unpack that market picture just a whole lot more. So still some weakness across the board for most markets, even out in Europe, getting negativity there. Almost 2% down as well on the Johannesburg Stock Exchange. The resources suffering really the hardest as well then. Around 6% down for the platinum miners, more than 2% down for the gold miners, with resources on the whole as well headed lower. We'll continue to give you the latest when it comes to markets, economic news, and of course the World Economic Forum. My colleague Diabo Seto still out there braving the cold and giving you the latest as well then out of the World Economic Forum's 50th meeting. Right now though, we do go to a short